Hello everyone, I'm Avni. Welcome to The Next Big Thing, the channel where I dive into future's most explosive investment opportunities before they go mainstream. I'm tracking things like lab-grown diamonds, semaglutide, small nuclear reactors, AI data centers. I've already done deep dives on some, and some more are on the way. But today, it's all about rare earths, those mysterious minerals at the heart of everything, from EVs, wind turbines to missile systems, and even the tech that you're watching this on right now. If you've been following geopolitics at all, you would know around them global tensions are rising, governments are scrambling, and smart investors like you are probably wondering if this is the next big investment opportunity. In this video, I'll be breaking down the geopolitical battle over rare earths, the numbers that no one is talking about, and whether this is actually a next big investment opportunity or just a political chess piece. So stay tuned till the end and hit that subscribe button so you don't miss future videos like this. Before we dive in, let's quickly understand what rare earths actually are. They are these 17 minerals on the periodic table, and we probably didn't read about them much as kids, but today they play a crucial role
because they have enabled our technologies to get smaller and faster and stronger and more resilient.
But despite their name, they're not geologically rare at all.
In terms of the deposits, no, they are not actually rare. What's rare about them is sometimes they're found in very small quantities, and in addition to that, they're mixed with all kinds of other minerals. The difficulty is sometimes extracting each single rare earth from all the other minerals that are involved in the deposit.
And here is the crux of the problem. China effectively controls the vital process of turning raw rocks into usable metals. Stick around because I have some surprising numbers coming up. China produces about 67 to 70% of the world's rare earths. But more importantly, it refines and processes about 90%. And when it comes to rare earth magnets, the single biggest value added product, China's share again lies above the 90% mark of the global output. What is even more fascinating is the fact that China exports a tiny fraction, about 10 to 12% of these magnets. It retains the rest for either stockpiling or for its massive domestic manufacturing in EVs, electronics, wind turbines, etc. And China knows its leverage and they're not afraid to flex their rare earth muscle. The biggest examples that come to my mind are first back in September 2010 when a Chinese fishing boat collided with Japanese Coast Guard vessels near some disputed islands in East China Sea, leading to Japan arresting the captain. China's response was swift and brutal. They halted rare earth exports to Japan for about 2 months. This embargo threw Japanese industries into panic mode, especially the auto sector, as they were on the verge of suspending operations. Back then, Japan was nearly 90% dependent on Chinese rare earth supplies, and even though this incident was resolved when Japan released the captain, rare earth prices soared about 10 times in the year following this incident. The message was pretty clear: China could weaponize its rare earth dominance whenever it wanted. Fast forward to today, the weaponization has only escalated. In April 2025, China implemented export restrictions on around 7 rare earth elements and magnets. And then in October 2025, they expanded the export controls to cover nearly all of the 17 rare earth elements. Plus, a restriction that sounded alarm bells for every manufacturer globally. Any product that contains more than 0.1% of Chinese rare earths now requires licensing. Even more concerning was that China announced it might ban exports of rare earths for foreign military use. If implemented, this could jeopardize development of weapon systems like F-35 fighter jets, Virginia-class submarines, Predator drones, Tomahawk missiles, and radar systems, all of which depend on rare earth magnets. Other nations understand the critical nature of these rare earth elements too, especially for defense.
There are two broad categories that have really got the spotlight. The first one is military uses, and that can be from night goggles to precision missiles to radar. And of course, that is a very sensitive issue for nations wanting to guard their access to those kind of minerals. The second area is regarding the energy transition for electric vehicles and for wind turbines. So that is key for most nations' zero carbon targets and cutting greenhouse gases.
To reduce its reliance on China for rare earth elements, the US has committed over $400 million since 2020 via the Defense Protection Act to rebuild a domestic supply chain for defense and clean energy. This initiative aims to domestically produce critical components for various technologies, from electronics to advanced weapon systems. Key efforts include revitalizing US mining, with MP Materials leading the Mountain Pass mine, and implementing trade agreements with countries like Australia, South Africa, or Brazil to diversify rare earth sourcing. In 2022, 15 countries, including EU, US, India, Australia, Japan, Canada, etc., launched a mineral security partnership. This partnership now includes over 30 nations. Other than the 15 founding members, 15 forum members have been added with critical mineral resources. The European Union has launched Resource EU.
We all know how important rare earths are for our industry, whether for cars, semiconductors, or military equipment. The decisions announced by the Chinese government on October 9th poses a significant risk. And this is why I can announce today that we are working on a new Resource EU plan along the lines of the Repower initiative. The aim is to secure access to alternative sources of critical raw materials in the short, medium, and long term for our European industries.
Japan has already partnered with Australia and has been successful in reducing its dependence on China from about 90% to about 60%. But here is the harsh reality. Despite all of these efforts from all of these big nations around the world won't escape China's dominance anytime soon. The uncomfortable truth is Europe currently has 0 active rare earth mines and just 1 separation facility in Estonia. US, with its massive government backing, still imports about 70% of its rare earth needs from China. Building separation facilities, mastering complex chemistry, and achieving the precision manufacturing that China has perfected over decades simply cannot be rushed. So with all of that as context and things like China plus one, the question I had in my mind was, where does India fit into this global race? And more importantly, can the rare earth story in India create wealth for investors, or is it just a strategic priority? The numbers might surprise you. India holds around 6 to 7% of the global rare earth reserves, around 7 to 8 million tons. Yet, our rare earth market in 2024 was just $40 million and is expected to reach only around $62 million by 2030, barely 1% of the global industry. Compare that to China's $2.8 billion rare earth market. Now, the rare earth magnets market is much larger in India at around $637 million. But looking at volumes, India's rare earth magnets demand is just 4,000 tons annually and is expected to reach about 8,000 tons in 2030, compared to China's current 240,000 tons of rare earth magnets. Even if just 2 to 3 companies captured this entire market, we are talking about a few hundred millions to about $1 billion opportunity. Not the multi-billion dollar mega cap companies that create generational wealth for investors. Now you might point out the projections that say demand will double from 4,000 tons today to 8,000 tons in 2030. But the fact is, if we look at China's massive numbers, which is around 240,000 tons as I pointed out earlier, that demand is driven by massive manufacturing, factories and assembly lines, areas where India still lags far behind. Manufacturing is the catalyst, and in my opinion, a massive shift from China to India in manufacturing is the single most important factor that can create a multi-billion dollar opportunity in rare earths market in India. Now, both Government of India and private companies are obviously talking about rare earth. So let's take a look at some latest updates from government policies to company moves or earnings calls. So there has been a lot of noise around big government initiatives this year. For example, the 7,300 crore PLI scheme for rare earth magnets, which received approval from the government's Expenditure Finance Committee in October. But the thing is, it still awaits final cabinet clearance. Similarly, if we look at big news in the private sector, GMDC has a major capex plan targeting production. Hindustan Zinc has recently acquired a new rare earth block. Even IREL is talking about expanding capacity. But here is the honest status update. Most Indian production is still at mining or early processing stage. The production of actual separated NdPr material, which is the key ingredient for magnets, still just sits at 400 to 500 tons per year from IREL. With this stat in mind, the government's target of 6,000 tons per year seems far away. GMDC's processing won't start before 2028. Hindustan Zinc CEO has said at least 5 years before any meaningful output is produced, which is around 2030, and most new magnet manufacturing plants are either in pilot or proposal stages. IREL's Vishakhapatnam plant is built but is still waiting board approval for commercial production. So even with all of this private and public capex, the real commercial production is at least 3 to 6 years away minimum. And let's not forget China. In October 2025, they've imposed fresh restrictions on export of rare earth processing equipment to India, making it even harder to build these plants. China can always flex and make life harder for new entrants like India with equipment curbs, price cuts, or technology restrictions. Now, you might be thinking, if rare earth is so strategic, shouldn't this be the perfect time to buy rare earth stocks? I know I was too, but the thing is, any stock shows bullish momentum for two reasons. One is sentiment based, one is actual results. And the sentiment driven rally has already happened. And in many cases, valuations have run far ahead of fundamentals. Let's look at some numbers. MP Materials, the largest US rare earth producer, has been the poster child for this rally. The stock surged an astonishing 378% in 2025 alone, with some sessions seeing 21% single day gains. But here's the catch. MP Materials is loss-making. The company reported an adjusted loss of 13 cents per share in Q2 2025 results. And analysts are expecting a full year 2025 loss of 23 cents per share. Despite this, the stock is trading at stretched valuations. Then there is Linus Rare Earths, the only major producer outside of China. They have followed a similar trajectory. The stock surged 192% in 2025. And over the past 5 years, it is up an eye-popping 576%. The market has essentially front-run the story, pricing in years' worth of future results that haven't materialized yet. Indian rare earth stocks have seen similar speculative surges. Despite zero meaningful rare earth revenue, GMDC has been the biggest beneficiary of these rallies. GMDC's stock rallied 25% in just 5 days in July 2025, hitting 52-week high of 472 rupees. And by September, the stock hit 547 rupees, a gain of 35% in that month alone. But as we now know, GMDC won't produce a single ton by at least 2028. The rally is purely anticipatory, based on government policies, trade tension with China, etc. Everything except for real results. And Hindustan Zinc has a similar story. The bottom line for investors is, for existing players like MP Materials or Lynas Rare Earth, the geopolitical premium and supply chain fears have already been captured in the stock prices. If you buy today, you'll be buying at all-time highs and stretched valuations. And both companies today face major risks: execution risk, price risk, demand risk. And for new entrants, like Indian companies, the sentiment-based rally is already done without a single ton of commercial production. Now going forward, what will create real value is not policy announcements or headlines, but actual results. And more importantly, a major manufacturing shift to India that can create genuine domestic demand at scale. Without these catalysts, these companies risk becoming hope stocks trading on narratives instead of fundamentals. So what should smart investors do? Should we ignore this sector, or is it worth tracking for the next phase? Well, as things stand today, rare earth remain more a geopolitical story than actual profit-making opportunity. Execution timelines are long, supply chains are young, and stock rallies like the ones that we've seen with GMDC or Hindustan Zinc are purely speculative. If and when things change, if India's EV sector scales rapidly, if PLIs result in mega factories actually launching, if rare earth magnet demands truly track the data, that is when this could finally become the next big investment theme. And I promise, if this scenario plays out, I will be back on the next big thing with a full analysis. spotlighting which companies are leading from the front, which stocks are showing actual results. So till then, stay cautious, stay informed, and remember the real winners will be the ones who catch this wave right when the manufacturing scale tips in our favor. Now, I'd love to know what you think. Do you agree that rare earths are a multi-year story for India? Are there any companies that you are tracking in this space? Drop your thoughts, questions, and ideas in the comments. I read each and every one of them. And if big moves start happening in this space, you will hear it from me right here on the next big thing. Thanks for watching. Hope you liked this video. Hit the subscribe button, and I'll see you in the next one.